If you're looking at the Savannah apartment market from the outside, it might just seem like things are cooling off a bit. But what's happening underneath the surface is a whole lot more interesting. We're talking about a huge rebalancing that's basically rewriting the playbook for everyone involved. Renters, owners, you name it. Okay, so let's get into it. All right, so here's how we're going to break this all down. First, we'll talk about how the market's crazy fever finally broke. Then, we'll look at the massive wave of new apartments that really shook things up. After that, we'll dive into this idea of two markets happening at once. And probably most importantly, we'll cover what all this means for you and what the road ahead looks like. All right, first up, the market's fever breaks. To really get what's happening today, we've got to rewind the clock just a little bit and remember how intense things were not that long ago. So let's just ask the question that's probably on your mind, right? Why does everything feel so different all of a sudden? I mean, if you're trying to rent a place or if you're a landlord, you can feel it in the air. That frantic energy is gone. The whole vibe has shifted. So what's the deal? Man, you just have to think back a little bit. It feels like ages ago, but it really wasn't. It was a total landlord's market, right? Finding a decent apartment felt like winning the lottery. Vacancy rates were basically zero. For every open unit, you had a dozen people ready to sign a lease on the spot. And that competition, it sent rents through the roof. I mean, some of the fastest growth we've ever seen. The power was completely in the hands of the property owners, no question about it. And that brings us to the main event, the absolute game changer. A huge, and I mean historic wave of new construction that just crashed into the market and flipped the whole script. Okay, so take a look at a building like this, an older, more established place. For years and years, these were the bedrock of the rental market, and they were always full. Like, always. Good luck finding an opening. There just weren't enough apartments to meet the demand, plain and simple. And this is where everything changes. Developers saw that crazy demand and, well, they responded. They went into overdrive. We're not talking about a few new buildings here and there. This was a flood of new apartments. It was a complete overhaul of the rental supply, and it happened so fast, it was like someone hit the reset button on the entire market. All of a sudden, if you were a renter, you had options, real options. Okay, let's do a little thought experiment here. Imagine a simple bar chart showing how fast rents were growing. A few years back, that bar is at a nice healthy height. Then, bam. During the peak frenzy, that bar just skyrockets into the stratosphere. We're talking unbelievable year-over-year jumps. But now, look at it today. That bar has just plummeted back to earth. It's almost flat. The momentum didn't just fade away, it slammed right into a brick wall of new apartment buildings. Okay, quick sidebar for a key term you need to know. Lease up. Super simple concept. When a shiny new building opens its doors, it's completely empty, right? So that initial period where they're scrambling to fill all those units, often by offering sweet deals like a month or two of free rent, that's the lease-up phase. And it's important because it can make the overall vacancy rate for the entire market look a little wonky, a little higher than it feels for a typical established building. This leads us to what I think is the most fascinating and most misunderstood part of what's happening right now. You see, it's not just one market anymore. It's really a tale of two markets happening in the very same city at the very same time. So on one hand, you've got the new flashy luxury buildings. This is ground zero for all that new supply. They're all competing against each other for the same renters, which means, yep, you guessed it, higher vacancy rates and a lot more deals and concessions. But then you have the other market, the older existing apartment buildings, and it's a totally different story over there. They're way more stable. Why? Well, they're not really in the same fight. They have a different type of resident, maybe at a more affordable price, and they're just more insulated from all that new competition. And that's exactly why you can't just look at the average vacancy rate for the whole city and think you know what's going on. It's super misleading. That single number gets dragged up by all those brand new half-empty buildings. The truth is, if you look at a solid, established apartment community, it's probably doing just fine, much better than that big average number would have you believe. Okay, so enough with the market theory. Let's get down to brass tacks. What does all of this actually mean for you? Whether you're renting, you own property, or you're thinking about investing, how does this affect you in the real world? All right, let's break it down. If you're a renter, the power has shifted. You've got choices. You've got negotiating power, especially if you're looking at those newer buildings. So go out there and use it. Now, for property owners, the game is different now. It's not just about filling empty units anymore. It's about keeping the great tenants you already have happy. And if you're an investor, the message is slow down. The easy money days are in the rearview mirror. This market rewards being smart and patient, not making risky, quick bets. I mean, this really says it all, doesn't it? The balance of power is shifting from the landlord back towards the renter. For years, the seesaw was stuck way up on the landlord's side. Now, all that new supply has come and sat down on the other end, bringing things back to a much more level playing field. So the big question is, what happens next? This crazy adjustment period can't last forever. So let's talk about the path back to something that looks a little more normal. And here's the first piece of good news if you're looking for stability. The construction boom is finally cooling off. The pipeline of new projects is getting a lot smaller. And that's exactly what the market needs right now. It's like an exit ramp off the highway, giving everyone a chance to slow down, catch their breath, and start to actually absorb all these new apartments. So here's the roadmap to the new normal. I like to think of it like the market just ate a giant Thanksgiving dinner of new apartments, and now it has to digest. So step 1, all those new buildings start to fill up. The move-in specials fade away. Step 2, as that happens, the vacancy rates in those new places drop, which pulls the whole market's average down. And finally, step 3, with less pressure, rent growth settles into a more predictable, sustainable rhythm. Not the crazy spikes we saw before, but not a flat line either, just normal. So this brings us to the big takeaway question. Is this market collapsing or is it just correcting? Because when you see headlines about rents flattening out and vacancies going up, it's easy to get nervous. But here's the thing. What we're seeing in Savannah isn't a crash. It's a correction. It's a healthy, frankly necessary rebalancing after a period that was just not sustainable. It was caused by supply finally showing up to the party. This isn't a market that's broken. It's a market that's finally getting back on solid ground.